All right. Good morning, good afternoon, good evening, everyone. It's been a fun few hours already. Those of you that have been trading, you've experienced some awesome volatility. And here we are with the leftovers. I managed to close last Friday's trades with today's move. We'll get there when we get there. But right now, I'm just keeping an eye on what's happening. The probability that we go much further is very low. And the closer we get to the banker's close, the more unlikely it is that we keep going, right? We have the Fed rate decision today, so it's unlikely that this thing will go to the moon. The catch is what will happen here, right? So if we go to a daily chart, we need to see what we've done so far. Clearly, we've exceeded the average, right? 104 pips. The average is in the neighborhood of 50 or 60. It's climbed up to 60 now, right? So we're about 180, 190% past the average. And so some of that is likely going to be given back. And so if we look at this on an hourly scale, you can see how it evolved. You can see where we are, right? So that you can call that our ceiling, right? And we know with time of day, we're going to be competing with the London fix and all this stuff, right? So there's a reason to see volatility on schedule to compete with this, right? So let's see what happens in this neighborhood. And considering what's already happened and how much we've exceeded the average, I'm tempted. Well, you can see here already. I'm tempted to fade this while we wait for the Fed decision, right? And so with this kind of blase CPI number, the euro took off. I'm fading this for the next 4 hours or so, hoping to go higher in the end, right? So primarily the fade is what I'm focusing on today. And then maybe we get to start over again on this run up from lower, right? So when the Fed decision comes along, I'm hoping to be somewhere down here, right? So I'm planning for a pullback over the next 4 hours and then maybe have an excuse to keep going, right? So that's the way I'm looking at it. That's the way I've been looking at it. And if I just remove today's trades from the picture, you can see how Friday closed if I go to a higher time frame. Right, so these are Friday's trades, and they closed today. And in the time of the event, I put a whole bunch of buys as we were pushing higher. So I was pulling down on my break even. And as soon as we got on top of the break even, I closed everything. So I booked losses, right? Oops, sorry. I booked some losses from last Friday and some wins, right? So in the end, I ended up, I think, making $27 or something up here. And so this event right there that caused me to go unhedged, I still survived and came out unscathed. Call that lucky or call that probabilities, call it whatever. Right, so here I am selling the top, looking for an excuse to buy, right? I'm looking for an excuse to buy this cheaper. And so for now, I'll be selling it. So I'm selling expensive on the way up, so I can make my money looking for a retracement. And it's this time of day that I'm playing with. right? This time of day, 8 a.m., puts me near the high of the day, puts me near the low. In this case, it's the high. And I know what to do from here, considering we've exceeded the average. It's not a runaway train, right? It's not going to the moon. Right. So if you have an opportunity to sell green candles until the Fed decision or prior to, do so, right? We suspect this will resume after the Fed. So we have to find a bottom before we can continue to go up. Okay, it's because the CPI came in weaker than expected. It will prompt the Fed to do its thing, right? And then as a result, the euro is looking to continue, right? Let's go take a look at our dollar index. This kind of will clear the picture. Right? On the daily, precariously at support, critical support. 10-year yields also at critical support. 10-year bonds, critical resistance. 10-year treasuries, same thing. Right? Today's critical. And it doesn't look good for the US. Every big news event is critical. Lately, it's been slipping in the wrong direction for the US. So that's been something we had to adjust to. I'm not used to betting against the US news effect, CPI, PPI, stuff like that. I'm not used to stuff like this. That used to be a low probability. Now it's becoming 50-50. We just don't know. Looks like we'll be heading into volatility over the next little while. Geopolitical situations around the globe, even here in North America, political situations. It's going to bring up a lot more volatility than we think. All right, so if we see green right there, boom, boom. Let me show my trades. Let me show my trades. There we are. If we just trade every day, a couple hours per day, whatever is happening on the macro scale really doesn't impact us that much. Yeah. Yeah, the global markets took a little bit of a reprieve this morning. No, I'm not looking at futures no, I'm just looking at Forex. There we go. My rhythmic trader platform, my rhythmic connection disconnected actually earlier. I haven't been able to get back on, so I turned off my Ninja Trader and I just turned off Rhythmic altogether. All right, so as a group, we have a couple of winners under the belt. Who doesn't like waking up with wins in your cup? Green candle. Yes. For you, it might be blue or purple or whatever color you use. It's green for me. Do a little bit of recycling. Yesterday's mess has been cleaned up. Or we're back to the top of the gray band. The green line is back to the top of the gray band. Right? And it's okay to book losses. It's part of the game. I traded 2 trades yesterday on the Euro Aussie with someone else. Lucky for me, there were wins, so it does not interfere with my track record. Let's keep this show on the road. Keep it going. A couple more right there. 1, 2. Right, the goal is to be buyers lower. We have to wait and see what the rate announcement points to, and then what the messaging is thereafter. Right? It's the speech thereafter you have to be concerned with. We don't read minds. We can't read his mind. And it's the questions that are unscripted at the end that can really throw a stick in your wheels. Yeah, the hedging piece is a matter of conviction, right? Like it's the 36 pip stop is a long tail stop. It's to protect the account, right? It's to protect the account. Your job as a risk manager is to take care of the ongoing risk, the risk that's right there in front of you, like the trades that are not working out. And so the trades that were not working out last Friday, I went into the weekend right there with the hedge, and the hedge, instead of triggering where it was, it triggered down here and itself closed momentarily because of the spread and the stop loss that was supposed to be here. So I got taken out of the game before I even got put into the game. And so I just walked out of Friday with my stop losses. I would have probably lost that too. All right. So this idea of the hedging is if you're committed to your bias and you can find ways to survive, right? This is not a runaway train. This is a mean reverting market. I'm aiming to benefit from that behavior. And so the hedging is really short term. It's not expected to last more than a few minutes. You know, worst case scenario, you're hedged for a couple hours. You don't want to be, sometimes it's just better to close a book a loss. Hedging is postponing losing. That's all it is. The 36 pip is a long tail stop. It serves for days like today, right? Days like today, if I had shorts down here A day like today is a long tail. You want out. Right? A day like today, you won't be hedging your shorts. So that's kind of the situation I had last Friday, right? I was committed to the upside. I was willing to hedge, and it took me out of my hedge before he even got me in. And so I ended up trading 3 days, really on the edge of my seat, worried about last Friday. Right? But we continued to make money. That's, I think, part that we forget, right? Every day while I'm carrying this loan I made to myself, I'm continuing to make money, right? So it's almost like I had to reach into my line of credit for 3 days. Right? Here's an opportunity to buy. Right? Considering what we've done so far, there's nothing that says we can't continue, right? It's just a probability, and the probability is very low. And the more we go against the clock, you know, the lower the probability. Typically, we don't want to have, you know, a full loaded book in front of a main event. You know, and that's kind of the gist of it. You know, just a handful, just a handful. Take advantage of the volatility. 36 pips by definition is 4 standard deviations. So if you trade something that has a different box, your stop is a different, no, different than 36. And you will behave the jump seat idea, you know, the long tail will be accordingly, right? 4 boxes. Inside of that space, you are responsible. Right. So this up here is just in case the poop really hits the fan. Right. I'm responsible for what's happening here. The probability is that the trades will close by themselves. And according to my statistics, I'm left managing about 4 trades out of 100. Like the risk manager is looking at 4 trades out of 100, and the trader is opening 100 trades. It's a split personality, right? We have to have 2 jobs. We wear 2 hats. Right? Back into the upper box. Take a couple of trades here. All we're doing is bringing break even closer to the current price. It costs money, so it's like an insurance company, right? We are happy to lose a little bit in order to lose less later. And it's not a loss, it's carrying inventory. That's another issue, right? People don't have the right definition of drawdown and loss. Right around here somewhere. If this market keeps going, it will be 200%. It's ADR. It could keep going. It's already done, what, 11 boxes? Let's see what we have here. We're done with the news. There we go. Can you take a trade around here? Right, we have to remember where we are and what's happening in 4 hours. And so it's this equilibrium, right? We're trying to find, have we gone too far? How much more is there? Where is the probable turn, right? So measure what we've done, appreciate what's been taking place, and figure out how much of this is there left, right? So you're running against the clock. And eventually you run out of money or you run out of time or both. Average bars, nice, bigger than what we had yesterday, the day before. Is it going to make a higher high? Curious to see. Another problem with hedging is that you're carrying these trades for sometimes days, and you have to keep winning while you're hedged.
In 10 minutes' time now, at the bottom of the hour, see the release of the weekly EIA inventories data. Crude oil inventories forecast is
and you might, at the time, while you're aiming to keep winning, you might dig a deeper hole, right? So hedging is really a double trouble, you know, 2 cans of worms, worms everywhere. Right? Where is it going? Up, down. Over time, I'm betting up. But for now, I'm looking for a drop so that I can get back in. We are approaching the bottom of the hour. This is when we have this typical move. Typical move, right? What comes next is yet to be determined. Do we go 4 boxes from here? Had the CPI come in hot, it would have pushed the Fed for more hikes, and that's not what came, right? So you can see what's happening, right? You can see why opportunistically it's going up. Right? But at the same time, it's not reaching for the moon. It's reaching for resistance. It's found resistance for whatever reason, time of day. And if you go far enough to the left, you'll find an excuse to slow down. This will go to 10 o'clock. Where's 10 o'clock? Yeah, well, I wonder what happened to my rhythmic. Let's see if I can get this thing going. Curious to see what the NASDAQ is doing. Here it goes. See if I got reconnected. Go to account 24. Number 24. 24. Nice and bullish moves. Look at that. Ooh. How much pain. Interesting. Are we at 61 yet? Thereabouts. Here we are. Last one, two. And then I'll wait to spend a couple more, a little bit higher. All right. I'm just moving my average closer to break even, or moving break even closer to current price. We're at the 61% retracement. Anything can happen. It's just a good place to expect a bunch of sell orders. It's also the weekly pivot up here, I think, if I remember correctly. Good place for a little bit of a pullback. Sure, you guys are having a blast. This kind of volatility is the kind of stuff we pray for, man. We haven't had a day like this in weeks. It's awesome. We're a little bit beyond the 61. If I adjust my boxes on this low down here, move this one out of the way, put this one on the low, this one on the low. Remember, we're up 11 boxes already on the day and 3 boxes on the current leg. Right, and then we have 3.5 hours before the next main event. I'm doubtful that the next 3.5 hours will be straight up. I might be wrong, right? I might be wrong. Just be patient. Be disciplined with your clicks. Let's go take Dixie, take a peek at Dixie one more time. Let's go to the 4-hour. Support seems to be holding. This support seems to be holding. Resistance, resistance. We're walking a tightrope. Right, we're not, or I'm not selling for the South Pole. Right, I'm just selling so I can be a buyer at a cheaper price. And if I'm wrong, and it keeps on going, I'll be upside down to last Friday. It's the probability of going against the average daily range, right? That is now slipping away because of the time, right? The ability of the market to go beyond its own potential, like to outdo itself, that potential. Oil news just came out.
5 million. A gasoline inventory to build of 2.566 million, build of 2.566 million, higher than the expected build of 1.5 million.
Nothing critical there.
The distillates, they saw a build of 0.881 million, build of 0.881 million, lower than the expected build of 2.147 million. Crude Cushing, and a draw of 1.593 million, a draw of 1.593 million.
So if I remove this and I just look at it in the opposite direction.
According to a Hamas official, Hamas denies putting forward new ideas for proposed Gaza ceasefire deal.
Right there. Potential around here would be nice. Right, about 4 boxes, 3 boxes. Ooh, 5 boxes.
So this is in downside move in WTI crude there, following the larger than expected storage build in WTI crude inventories.
Let's see what comes of this. I'm just using the fib for a ladder today. And we have enough volatility.
Now posted out the weekly EIA inventories report on the feed for anybody interested.
Bottom of the hour is gone by. Have one last box right there. I may be forced to eject a few trades. Ouch. It could. Let's see. Let's see what do we have next on the way up. This stuff here. How far away is this? Another box in a bit. If we get there. I'm fading this move only because I'm thinking I'll have a chance to get in cheaper in time for the real main event. And then during the actual speech itself, there's usually a lot of volatility, whipsawing type stuff. You want to usually wait for that to settle down, right? So maybe I'm not buying until tomorrow. We'll see. I'd love to be a buyer below 7, 690, 685. Call me crazy. We're waiting for volatility. London fix, bankers close. We have an outside range right here. Do we have another one in the making? Where are we at now? 113 pips. 207% of the average daily range. We have to be on the lookout for a trap. This is looking very attractive to a lot of people that are chasing the market. Right? So don't fall for the trap, right? You don't want to be chasing stuff like this. Right? The news that created this is over. Right? The news that created this was over when the news came out. The tough part is when it's threatening something like this. Right? When it's so close. That's, That's the anxiety part. Other than that, we trade probabilities. It's okay to make mistakes. It's okay to try again. It's okay to try multiple times. At some point, your plan tells you when to stop. Are we testing this? Right. To the moon. It's kind of a zone up here. I'm looking at 33.
The euro extending gains against the dollar, now up 1% on the day as the dollar extends its weakness.
Yields have broken support. This right here. This right here. It's easier to see it this way. Right, so we're not holding support anymore. Let's see what comes of this. Yeah, if the market goes up and takes these stops out, these belong to the trades in box number 1. These trades here, that's their stop loss. And so it's like a caterpillar, right? I'm only ever keeping 4 boxes on at once. If it goes up into box number 6, it takes off box number 2. I should have put a couple on here. Take note of that. If we go back up. So if we're leaving this high behind, if this is the top, well, we have to start looking at a destination on the pullback. Right, somewhere around here. There seems to be a lot of potential in this area. Right around here. That would be nice. Go in here, spend some time, go back up. Just thinking out loud. Something like this. Before we do something like that. We have to stay. We don't want to get shaken out of a good plan, right? And because of timing, we find ourselves at the extremes, and therefore we find ourselves building wicks at this time of day. today specifically may extend the day or leave behind a great big wick. We have to wait and see. This Fibonacci right on the high, right on the low.
Russell 2000 extends gains. Last up 3% now.
Let's see what the NAS is doing. Oh, nice. Let's take a sell here.
Order filled. Order filled.
There. Selling 4 contracts. Let's book it. There you
Order
go.
filled.
$300, 3 minutes. Done. Let's go back to Forex. Green candle, sell a couple if you can. What a crazy day. Nice and slow. And lift off. Green candle. One. And then I'll save for this upper box. So we're going into the fix, top of the hour, 11 o'clock New York. $210% of the average daily range, 114 pips. I wonder what tomorrow's average will look like after today. Yeah, discipline, patience, endurance, all these words, they all come in They all come into play. Everything you've been told is true. Well, to some degree. Everything about the psychology of trading, the hubris, the ego, the fear, the greed, that's all valid. And no two people experience the same degrees of fear, greed, and hubris. And that's where the devil is, right? It rests between our ears. The system is just a filter, it's just a way of sorting information. Uh, 114 pips so far today. This next hour or so, I'm really hoping we stay sideways. And then maybe even turn around. Or if we do that faster, that's awesome. I really want to get to right there, 2 boxes away. So I'm looking for a pullback, retracement, I'm looking to give back some of this enough to get to break even. And on the way, it's booking profits. I'm recycling. I'm pulling that line up, so on and so forth. Right? The process of recycling is what fills the coffers. It's the volume of wins that fills the coffers. We're still picking off the top from here. Seven minutes, 8 minutes from the hour. Wonder how much pain people had to survive today. This kind of stuff, damages a lot of psyches. Just baby steps, baby size trades, baby size expectations. We don't want to find ourselves with the cart in front of the horse. You know, the Fed meeting has the potential to have us up here. But it's not going to be without those unscripted questions during the speech. And that's when the volatility creeps up. If I lose today, I lose. I'm okay with it. It's part of the game. 5 more minutes or so. $114 pip day. We don't see them very often anymore. We knew Wednesday would be critical. Yeah, I don't want to be hedging on a day like today. If I'm wrong, I want to be wrong. I just want to come back tomorrow, maybe in the stratosphere, and start again. Today, I'm working on one strategy. $116 pips. My platform on the left side here keeps track of the average daily range. For 116 pips, 212% of the average. Let's adjust this right there. I'm still looking for 21 pips. I got to bring that up. I'm going to sell one, sell two, and I'm saving two in case we get a little bit higher. Now my break even is 18 pips again. Right? Like trading like an insurance company. Four minutes. I'm really curious what will happen in the next few minutes here. With this London fix on a day like today, we'll see. What are we at this week? 212. Yesterday, 120. Yeah. There she goes. A couple minutes early. Let's see. If I can recycle on the way down, I want to keep pulling the average up as I recycle the trades. If I recycle the trades, like if I close them, I'm waiting for a green candle. Trickle back here would be nice. Looking for this. This fog box is really quiet all of a sudden. Even the tick strike. Yeah, it's Euro USD soars as the soft US CPI report gives life to the Fed rate cut hopes. We'll see. All right, so if you get a green candle, reopen that trade that closed. Top of the hour is here. This is hopefully the start of the fix. There's green. There's another green candle. Trade number 2, bring the average to 16 pips. What will come of this? Come on. Ooh, the tick strike just turned green. Ba-da-bum. I wouldn't be surprised if it takes me out and then comes right back down. No, I'm probably not the only one up there, considering how it relates to previous price action. It makes sense. Rate cut hopes in September. Pushing the high. 117, 214%. The longer we stay up there, the more people fall into the trap, right? You eventually we have to adjust our either plan, our expectations. You know, you have to adapt to this incoming information. And that's where the box comes in, Andy. Right? Understanding what's happening here, 3 and a bit is totally normal. I have my stop losses right there, but I don't want to be staring at them. So I'm just putting them off the edge of the screen. If I get hit, I get hit. Right? If I was going to hedge, I'd be removing all of the stop losses and putting a hedge trade in its place. I don't want to be hedged going into the ECB. I mean, the Fed rate decision. Going back the other way, let's see. I'm curious to see how far past the 61. How far are we past the 61%? We're about halfway there. $12 pips past. All right, it's pushing for here. Maybe pushing for this. More outside ranges. So the last leg is beyond 3 boxes, 3.5 boxes. Overall, we've done 119 pips, 218% of the average. It's a game of probability, and then we know pushing the extremes is what it's all about.
Extending gains to more than 5% today.
And so by pushing the extremes, we expect a retest, you know, a move back towards the mean or the mode, whichever one you want to call. And this is kind of what we target, right? This right there. That's my average. And I'm trying to structure things so that my average is in line with the market's ability to get back to its average. Right? And so a news event like today sets the stage for volatility, but it also uh, it's like a bookend, right? So it stops one event and starts something else, and that's kind of what we have to see it as. This is the start of the next move, right? So I'm trying to find the start of the next move. This morning's news event is a bookend until we get the Fed rate decision. Yeah, I don't want to be looking at my stops. So if I can get a swing in this direction in the order of 2 boxes, my day's green. Hundred 19 pips on the day. We haven't had a day like this in weeks. When we're this close, the anxiety is real. This, like right there, these trades right here will probably close at break even. Considering the time that's running away from me, I'm still targeting here before the Fed decision and the speech thereafter. And so I'm hoping to get to break even in time to reset everything and buy for the next leg up. What a crazy day. One last push. Those of you that track Camarilla pivots, we're well past the H6 pivot. We're almost at the H7 pivots, which is extremely rare. There we go. Oh, sorry, my chat box was turned off. Chat. Yes. Oh, H notes. Three and a half boxes up on this last leg. 119 pips on the day, 218% of the average daily range. And let's go take a look at NAS for a sec. Oh, let's sell some of this.
Order filled. Order filled.
Sell it twice. There you go. Yeah, let's take that.
Order filled.
$625. Let's go back to playing Forex. Want to recycle some of these? Yeah, let's do it twice. Today might be an extra long video. I have to take these pills with food, so maybe I'll just go grab a big bowl of yogurt or something. All right, so we're hoping to recycle this, keep bringing this line, within a reasonable distance. If we overtake the white line, we're in the money. If we're in the money before the Fed rate decision, flatten your book. This is working properly. So let's go back over here for a sec. That worked out nice.
Order filled.
Let's buy this. Within one box or one grid. You see the grid? I'm willing to buy at the bottom of the grid right there. Right there.
Order filled.
And I'm getting ready to get out of this. Right
Order
there.
filled.
640. So I made $15. Cleaned up my little mess there. And making money over here. Show and tell. Right? I'm just some dude on the internet showing you how I do it. Call me crazy. Yeah. Green candle. If it gets back up into the upper box, I'll recycle these two trades. Unless, if it doesn't go back up, I'm not going to borrow from Peter to pay Paul. So just going to wait. All right, come on, go back up. The plan remains the same, right? We want to do something like this, and somewhere in this vicinity, before the Fed rate decision, we're looking to go in the opposite direction. So the time is the next piece of the puzzle, right? How long will the drop take? How far will it go? Do we have time to do this in the next 2.5 hours? Keep an eye on the clock. Keep an eye on your risk. Recycle. Target break even. If you can overtake break even, everything thereafter is free money. All right. We have a plan. We just have to follow along with it. The market's trying to get you to give up on your plan. We're just starting or restarting from this high. And so now we're measuring on the way down. Right, so I'm just going to recycle this box and use the box to guesstimate where this is. All right, so now my count is all different, right? Because I've moved my boxes, the number of clicks per box, I'm now recycling, and I have to be accountable for my clicks, right? If I close 2, I can only put 2 back on. I'm moving my boxes around, right? It's almost like cheating on my inventory. And just be accountable to the number of clicks. Right, so if we put this back the way it was, just to see where the, see, now we're recycling. 1 and 2. I'm putting back the same 2 that closed in the exact same position 5 minutes later, 6 minutes later. All right, so from what we have here, we have a high, we have a lower low, and we're hoping to now have a lower high. Right? We need a lower high to justify this lower low. And if we have a lower high, then we can, wherever that high is, we can assume it's the beginning of the next box. Right? So it's one step at a time. It's one box at a time. It's one trade at a time. And eventually you build this inventory, and now you're responsible for this inventory. Breaking even is the first way, the first way out. On a day like today, you're competing with the clock and a major news event. So risk management, right? It's a 2-man job, and you're doing both. The trader is opening the trades, setting up the stage for a high probability of success, and the risk manager is managing the losers. Right? Nothing here is losing yet. Okay, so is this where I put my new box? And now we're looking to go this way. We have to remember average daily range, 218%. So we've doubled and more than doubled it. So we have to have this idea that something's coming to an end and something new is starting. And we can justify by measuring and looking for things to be average or otherwise, right? Just like this here was 3 boxes. This here was 3.5. And now maybe we're turning around. Maybe. So as we recycle trades over the next little while, we'll be able to talk to our fishing buddies. Hey, you won't believe the size of the fish I got. It was only 3 inches long. Right, so 1 box, 2 boxes. If we drop 2 boxes, we're at break even. Anything beyond that makes us money. If we go up, we start to close losers. 1 box at a time, right? We don't flatten everything. We just take the losses as they come. Right? I'm not giving up on my plan. I just don't know where my plan starts, right? I've been trying to find the start for the last 3.5 boxes. I'm just going to put you guys on mute for a couple of minutes. I'll be right back. All right, I'm back just in time. Whew. I ran downstairs, grabbed a big bowl of yogurt, and came back up. Let's see if the high of the day will hold. And see if we can rotate from here. Probably not. According to what we've seen so far, they seem to like pushing it higher. So let's see what happens. All right, is this the high of the day? Let's go take a peek at our dollar index one more time. Dollar index is holding support. The yields themselves are not falling out of bed. And we've broken the previous low, but we're not falling out of bed. So we have to watch how this closes. Watch how this reacts over the next little while. Coming out of the side of the box. Right? Side of the box is undetermined, so we have to put one on top of each other, and then we let the price decide if it's going to pick the upper box or pick the lower box. Right? So from this point here, the market will choose to go there, or the market will choose to go here. Just let the market pick. Clearly, I'm in the path if it chooses to go up. All right. Today is not a day for me to be hedging. I would rather book losses, come back tomorrow from a fresh start. So these are the stops. I'm just going to put them off the edge so I don't see them. And then we're just watching the price action. We got to make a new high. We're going to keep the current high as is. I'm showing my intent. I want to see it go down. Probably one of my longest recordings to date. All right, let's pull this rug. And so we have built a position from here to there. Oops, here to there. Now we're waiting for this. Oops. We are now waiting for something like this to pay the bills. We're on the way to recycling, I hope. I'm just gonna take this out. So so if I close a couple here, I'll recycle them. I want to keep pulling this white line up as the price goes down. Eventually we overtake the white line, I hope. Lots of high hopes today. It's time to close this. We're at support. We've gone up the ladder. Time to go down the ladder. Where's that last entry I took? I think it was right around here. Right there. All right, so remember this. We're testing support. We seem to have found it. Let's see if we can say the same thing about the yields in a few minutes. All right, so recycling, if you can, green candle, one, move the white line up, 14 pips, 15, 16, 14, 15. Take a second line right there. Pips. We have a lower high right there. We have a lower high. We next need a lower low. Let's see if we can get ourselves a lower low and then start to head this way. And then remember, by the time we get the Fed rate decision and the following speech, we have to kind of anticipate volatility, whipsaw, try to get out of this before the main event. Okay. We know what to do. We know the plan. We know the next plan. We just don't know where it starts. Right? We don't know where this is going to start. Maybe it starts right here. Right? We're trying to find where this is going to begin. And in the meantime, hopefully we get paid. All right, I'm going to let you guys go and trade your plan, trade safe. All right, enjoy yourselves. Good luck. Bye-bye.